students, we know that there is a concept of agency relationship. What is the concept? That where one party acts on the behalf of another party. One party acts on the behalf of another party. So, the party which is acting, that is called agent, and the other party on whose behalf they are acting, that is called principal. Principal. If I ask you, one of you, that go and buy me a book for me, so you will be doing transaction on my behalf. You are agent, I am the principal. And the relationship among us is that of agency relationship. Agency relationship. Now, similarly, this is the same relationship which exists between in case of a corporation or a company, what happens? Directors of the company, they are running the company on behalf of shareholders. So shareholders are basically, their money is invested and directors are running the business for them on their behalf. So directors are agent and shareholders are principal. So directors are agent of shareholders. So agency relationship is there. Now the point is, shareholders are not involved in the business and directors keep using their money, keep running business the whole year. Now the chances are that director may misuse the funds. They may use the funds for their own benefits and for not the benefits of shareholders. Possibility is there. You know, when no one is watching them, and at the year end, directors, means which are agents, they prepare a report about performance of business, which is called financial statement. That report is called, and present that to shareholders, that we have done this for you, that we have served, we have earned this much profit, the assets of business have increased by this much, liabilities fallen by this much, for example. So directors prepare report. Now the problem is, directors may prepare false report. Directors may not be acting in the, now you know that there is a, when I talk about agency relationship, so from agency relationship, I must say there is a law, this is legal term, agency law, fiduciary responsibility. of agent. What is fiduciary responsibility? What does it mean? The meaning is that fiduciary responsibility means, one, agent has to act in the best interest of principal. Yes, they have to act in the favor of principal, best interest, and they have to disclose all information to principal. Nothing should be hidden from the principal about the business he is doing on the behalf of a principal. Now, just see here. Students, one thing more came to my mind during the lecture. So usually I am switching, I am changing it, moving from right to left, up to down, and so on. Sometime in a flow, I may proceed further and you may have not noted down the point. Don't hesitate to ask me to go back to the previous page. Got it? That you have to note down something. I'll be happy to do that on the previous points. So don't hesitate at all. Thank you. Now, so when we talk about fiduciary responsibility of agent, fiduciary responsibility. So best interest of principal and disclose all information. So this is what is when they are preparing financial reports, directors, they are accounting, they are disclosing all information to the shareholders. Yes. Now, next point. The next point is, the point over here is still there is a chance that the report they are preparing, that, if I am reporting about my performance, what I will report, I am the best, is what I will report. I am biased. I will try to present facts and figure in a way to boost my performance, to get appreciation for me, to get increments for me, to get promotions for me. I will do my best because I'm biased. I am preparing a report for myself that this is what I have done. Now, the point is, then what should happen? So this report, financial statements prepared by shareholders, may not be correct, may not be, they may contain misstatements of facts. So there is some independent. Here comes the need of audit. So auditor evaluates financial statement prepared by management or directors, that whether they conforms to reality of business. Directors are saying business have grown by this and this. This is the sale, this is the asset. Auditor will check whether what financial statements are showing on a paper and what is actual in the business, whether it conforms to reality, it is based on facts, whether they have been prepared unbiased, prepared by an unbiased attitude or not. Or they are biased, they are showing a biased picture of the business affairs. And reflecting the actual circumstances, state of affairs of business or not. So you see, auditor evaluates financial statements, that whether they, you see, I have used so many words to explain one point. Let me give you a bit funny example, which normally I give. How many of you are using Instagram? Yes, tell me. How many of you are using Instagram? It's not a bad thing to use. Please don't hesitate.
No.
No, not using. Not using?
No.
Okay. Oh. Good. Okay. Other people now will not respond. Okay, no worries. So TikTok and Snapchat, yes. Yes, good. So you see here, you are following a person over there. You are following a person over there who is posting his or her pictures and the videos every other day, having so many followers, fan followings. And you are also a bit fan of him or her, fan of the handsomeness or beauty. All of a sudden, someday, you are in a shopping mall and your friend tells you, just see who is in front of you, standing over there, 50 meters away only. So who is that? You see, but doesn't notice anything important. Your friend tells the same person you always talk about. See, is it the same person? Is he or she the same person? Oh my God. The pictures are so much modified. They have so many filters. So pictures are not showing the reality. Got that? So this is what auditor checks. Auditor checks financial statements and tells the financial statements are telling the reality of business or not. Auditor evaluates, and auditor, after evaluation, auditor gives a report or opinion on the same, that whether they are showing the same or not. Now, students, the next point. So what is the job of auditor? We have learned one thing. We have learned one thing. What does auditor do? Auditor evaluates the financial statement and gives the report. So if I write in the short words as one small sentence, that is, auditor gives opinion on credibility, which we say truth and fairness of financial statements. Whether they are, that truth means the same points. Actually, I have explained true and fair. This is the job of auditor. If anyone asks you now, after attending my class and before attending my class, there should be difference in you. If anyone asks you that now you have attended Mr. Hamza's class, first lecture was there, tell me what you have learned about what does auditor do? What should be your answer? That auditor reports on financial statements of the company, whether they have been properly prepared or not, correctly prepared or not. They are reflecting the actual circumstances of the business or not. No, your answer should be like that. I hope it is clear. So, students, the need of the audit. The auditor's job we have discussed. Now, from the agency relationship, there is another concept in your syllabus. Student, what the audit is and what is the job of the auditor? Is that clear to you people, to everyone, every single person? Tell me, is it clear? Tell me, please. Yes. Everyone.
Yes, sir.
Clear. Yeah.
All right. Good. Now, the next point is, that is stewardship relationship. Stewardship, basically, the concept is derived from agency relationship. So stewardship means that one party deals with the assets of another party. Yes, deals with, takes care of, utilize that in the manner directed by the other party. This is called stewardship relationship. And we say directors are stewards of shareholders' assets. Yes, because they take care of that. And there is a concept that is stewardship accounting. What is stewardship accounting? Stewardship accounting means that the report by stewards for use of assets, that how they used of the assets, that is called stewardship accounting. And you know that financial statements, in other words, they are also called stewardship accounting, because after the reporting, how utilize his funds, assets throughout the year. Now, next. So stewardship is also clear to you people. I hope so. Now, the next point. Students, audit. We are talking about audits. Students, I told you that why audit is required. One reason. Yes. Students, audit may be required by law for certain entities. For certain entities that may be required by law. If they do not get that audited, they will be penalized. For example, all listed companies, they're required by law. There may be some other private companies as well, depending upon type of businesses and depending upon the local law of the country. So that is called statutory audit, which is required by law. Some charities, for example, some trusts, some trade unions, they may are required by law to conduct an audit of their financial statements. Now, the next point is, the other is called non-statutory audits. Non-statutory audit. What is that? Non-statutory audit is one which is basically voluntarily conducted by those entities getting audits done not required by law. Still they are getting audit. Law doesn't require that, but still they are doing it. That is called non-statutory audit. For example, sometimes they are very cautious partnerships. They want to settle accounts among themselves. So they want audit of every financial affairs. Or say we get audit of financial statements done. So this will be more acceptable to authorities. Accounts will be more acceptable to authorities. Tax authorities, for example. Or we are going for a loan negotiation with the bank, for example. So if we get our financial affairs audited, the bank will be more confident and it will help us to negotiate a loan. And sometimes, you know that businesses, sleeping partner. There are sleeping partners who do not involve in the operations. They fund and they say, "We just give me the profit share, you run the business." So sleeping partners may be interested in the audit that what is they are reporting, that is correct or not. So these are the reasons or advantages for non-statutory audit. Now, students, we will have a short breaks. I know in the online class, even since it's theoretical, we'll be having short breaks. So it is 5-minute break. We will be back in 5 minutes and then we will continue. Stay connected. You just can relax 5 minutes. Yes, please, everyone now. So we will proceed further towards, yes, towards the next topic. Just a minute, please. Let me share. Yes, here we are. The next point is, that is assurance engagement. Yes, that is assurance engagement. Now, what is the meaning of assurance engagement? I will give you a simple example first. I will give you a simple example first. Students, tell me, can you see my screen? Tell me, please.
No.
No.
Just a minute. Just a minute, please. Now, can you see that?
Still no.
No.
No. Oh, no. What is happening? Just a minute, please. Yeah, I think now it's okay. Yes. Is that okay now, everyone? Yes, good. Now,
Yes.
so now, let us proceed further. Students, the point is, Mr. X, he wants to buy a car, and Mr. Z, he is selling a car. Mr. Z, he says, okay, I have a car, which is Honda Fit. The car is Honda Fit. He says, for example, if I am wrong, not wrong, 1300 or 1500 cc engine is there, horsepower, and the car is very good condition. It never went, never accidented. He is claiming the different features about that. Mr. Z. Now, Mr. X, he is not expert. He wants to check all these things. But he said, I'm not an expert in checking all these things, engine and mechanical condition, physical condition. So he goes to car.mu. He goes to them. He say, you are expert. You are expert in your dealing business. You are practitioner because you are doing this practice. Can you please check whether this car, the criteria, he tells, criteria is there. It is non-accidented. It is engine is working good. Yes. So what they do, they say, okay, we will charge a fee for that. I say, okay, go ahead. So car.mu picks that car, evaluate that against criteria, evaluates, checks. start it, take a short drive, and other things. He check the body condition inside the seals of the car as well. And after checking that, they obtain evidence. They obtain evidence whether car is in good condition or not. And then they report to who reports? Basically, they report based on that evidence. They report to Mr. X. This is the whole process of assurance engagement I have explained. Now just see here. I will simply relate it with assurance engagement. Assurance engagement is a three-party relationship. Three parties are involved. What are three parties? Number one is practitioner. The second is responsible party. Who is practitioner? Practitioner is expert, having specialized knowledge. And intended user. He is intended user who has to use the report and make a decision. He is the responsible party who has to provide the subject matter. This is subject matter. This is a matter which is going to be evaluated against a criteria. And who is evaluating? Practitioner. And obtains evidence and then gives a report. So three-party relationship. Then the second is there is a subject matter. There is a subject matter. For example, car is here. And then the third is, there is a criteria against which the subject matter has to be evaluated. Criteria is there. And then evidence is obtained. Fourth. Yes, evidence means proof. The subject matter is in accordance with criteria or not. And the next is, final is report. A report is prepared by practitioner for user, intended user, who ultimately use. So these are 5 elements of assurance engagement. 5 elements of assurance engagement. And you see here, I have explained how it works. The whole process. Practitioner is evaluating the subject matter against the criteria, obtains the evidence, and subject matter is provided by the responsible party, and then practitioner reports to intended user. So this is called CREST. CREST is the mnemonic. C-R-E-S-T. To memorize 5 elements of assurance engagement. Now, there are so many assurance. So I have given you one example of practical example of assurance engagement of your life. It happens. It's quite practical. Then there may be other examples. Let me link it with the audit. Audit is also assurance engagement. There are so many other as well. For example, auditor is a practitioner. Directors are responsible party and shareholders are intended users, because auditor reports to shareholders. Subject matter is financial statements, which have to be provided by directors. And it is evaluated against laws and regulations and IFRS. We know that. Financial statements are evaluated whether they are prepared as per law, as per IFRS or not. Auditor obtains evidence and gives audit report. So what is the purpose of assurance engagement? Why Mr. X engaged car.mu? Why they engaged? Because they say they have specialized knowledge. What they will tell, we can rely on them. They are independent. They are expert. So the confidence will be enhanced. So Mr. X, with their report, Mr. X confidence regarding this subject matter will enhance. So with assurance engagement, the purpose, what is the purpose of assurance engagement? Tell me, you will tell me. I have given you answer. Be quick, tell me answer. What is the purpose of assurance engagement? Tell me. Be quick. What you have understood, why, what is the purpose of assurance engagement? Yes, please. Tell me any idea. Staying silent is not an option. Yes. The purpose of assurance engagement is, no, this is what is a memorized answer, Zubair. I don't want such answer. Please, I have not spoken this word at all. I want answers based on common sense. No, assurance engagement. I have not mentioned financial statement here in this case. What is the purpose of assurance engagement in this example?
To obtain proper evidence to reach a conclusion.
Good. Good. Any other idea? Someone else? No, I'm not talking about financial statement. Financial statement is a type of assurance engagement. The purpose is to enhance the confidence of intended user regarding subject matter. Isn't it? With the report, their confidence is enhanced that what we are getting is true or not. What the report we are reviewing, that is true or not. What the item we are purchasing, that is true or not. On the basis of that, he will decide to buy this car or not. Now, so the purpose in the even the case of audit report, why auditor is engaged? For the confidence whether given are true or not, finance statements are correct or not. This is the purpose. Now, so the next point. Students, assurance engagement we have learned. So what is the types of assurance engagement or levels of assurance engagement? I must say levels or types of assurance engagement. Assurance. Types or the levels. Now, just listen an example. There is a Mr. X, which is from Mauritius. I have to strike a deal that is being negotiated with Mr. Hamza and Mr. X. Deal is for 5 million rupees. No, I don't know that person too much. That lives, for example, that lives in the north. And I have never been in the north of Mauritius. I don't know that person. So I ask some of you, or one person of you, I say, can you please get information about Mr. X? You go there. Say, okay, Mr. Hamza, I'll get information for you about his credibility, about his repute. That you go, you get information from 5 to 6 sources. And you come back to me, you say, Mr. Hamza, I didn't find anything bad about him. I say, it means he's a good guy. You say, I didn't find anything bad. You again repeats. I say, dear, please go and get more information. It is a matter of 5 million rupees, my life saving. Lifetime saving. So it is a very big transaction for me. Then you go and get more information. Now, after 15 sources, you get back to me and you say, Mr. Hamza, please know, Mr. X is a credible person. Yes. Now, my question from you is, what is the difference between these two statements? Do you feel that? Is there any difference? Tell me. Is there any difference?
He has a more confident
Exactly. I appreciate that here the confidence level is high. I am getting more confidence from my student about that person. Here, less confident. Here, assurance level is high. Here, assurance level is moderate or low. Why? Because the reason here you have done more work. Here you have done less work. That's why your assurance level is low. You are less confident. It is just like that. If you prepare for exam, just read a few days. Your condition is less confident. And here more confident. If you have, I usually say a quote I have read somewhere that if you are not over prepared, it means you are under prepared. Yes, you are under prepared. Keep that in your mind. So we have to be over prepared for the exam. Now, next. So come back to the topic. That here they got information or evidence with more work. Evidence is proof. Information. And he got information from less sources, evidence from the less sources. So assurance level is moderate or low. Here it is high. Now, next. So you see here the wording used is negative. When you are not confident, you play with the words. You are not straightforward. This is a psychological thing as well. This is something psychological as well. When you are, yes, not confident. You don't do it, say it straightforwardly. You don't say it. And when here is the negatively worded report. And here it is positively worded report. Positively, straightforward. No ambiguity at all. So you see here, it is high level assurance. I told you, high level. It is moderate or low level. Yes. And the next point is, so then this is called reasonable assurance. And this is called limited assurance. Now, I will sum up everything below these two. So reasonable assurance is basically, just a minute, please. Why it stopped working? This is a high level assurance. The first point, Oh my God. It is a high level assurance where high level work is required. Where positively worded report is issued. And here, low level assurance. Low level of work is required. And negatively worded report is issued. Negatively worded report is issued. Now, students, I will link it with the financial statement. Don't you worry. First of all, idea should be clear. The concept should not be cramming. Now, just see here. Student, what is the why the result is different? Amount of work. If I write one line, that what is the difference between the two? The outcome is different. Why is that different? There is one difference. That is low, you can write moderate as well. Low or moderate. Yes. So what is the difference? One line difference is that amount of work is different. Amount or extent. Hence, the outcome is different. Yes. Now, next point. Next point. So the next point is, that is, students, let us link it to financial statement. In which case, auditor has to provide reasonable assurance, means have to do more work. In which case? In case of statutory audits. In case of statutory, which are required by law, auditor has to provide reasonable assurance, means he has to perform more work. Positively worded report. And in the case of, and when limited assurance, in case of review engagements. Now, review engagements. Audit, we know that. What is audit? So example is review of cash flow forecast, review of interim financial statements. I will explain, don't you worry. Now, review. Sometime company produced cash flow forecast next 12 months. What will be cash inflow? What will be cash outflow? And because banks require that you need loan, bring a cash flow forecast and auditors report on that as well. So when the company prepare cash flow forecast, Forecast means related to the next 12 months. So they go to the auditor, that give it report on it. Auditor check that and gives a report. And that is basically limited assurance, low level assurance is given. Interim financial statements. What is it? Quarterly financial statement issued 6 monthly by the company. And sometimes companies want report from auditor on that as well. So that is limited assurance. Now, the question is, okay, before I proceed, so I will explain the wording of report in this case. In the case of reasonable assurance, you know this wording, that in our opinion, financial statements give true and fair view of company affairs in all material respects. This is positively worded report. And in the case of review engagement, let me write, then you can compare the both. What is the wording of report? In case of review, nothing has, you see, negatively worded. Nothing has come to our attention that causes us believe that financial statement do not give true and fair view of company affairs. Yes. You just see the difference. Here positively worded, here negatively worded. Now, next point. The next point is, students, so what if I ask you that what is the difference between audit and what is review engagement? And how it is different from audit? Example I have given you. Review engagement is basically, again, it is an assurance engagement. It is an assurance engagement. The topic is, here is the topic. Assurance engagement. Yes, review engagement is assurance engagement type, in which auditor performs work of audit nature but which does not constitute an audit. Why it does not constitute an audit? Because the amount of work is low. Because the amount of work is low. That's why it does not constitute an audit. You know, nature is same. I told you here, what is the difference between the both? Reasonable and amount, extent of work is low. I told you. Now, next. So students, limited assurance, absolute assurance, is it clear? And review engagement, tell me please. Is that clear? All right, now, welcome. Now, the next point is, so students, just see here. Services offered by audit firms, normally, audit firms, they are normally audit firms. Yes, there are two types. One is assurance services, which I have explained. And the other is non-assurance services. Non-assurance services. So non-assurance services, assurance services we have talked about. Non-assurance services, they are further of two types. One is called agreed upon procedures. And the second is called compilation engagement. And compilation engagement. Now, students, agreed upon procedures and compilation. What is compilation? You know that audit firms, they compile tax returns of the companies. Compiling means information, compiling the data in certain way. They even prepare financial statements of the companies, cost cards. So summarizing, classifying the information and compiling that in a certain way. No assurance, no confidence enhancement. What we agreed, we provided service, we charge for that. And the next is agreed upon procedures. What is agreed upon? Again, it is facts finding arrangement. Facts finding engagement. What is it? A fraud occurred in the company. They say investigate who has done the fraud. No assurance, but yes, we are providing a service. Then they say, our sales have dropped. We have 10 products. Can you prepare and check which segment has been affected the most? Which product has affected the most? Facts finding. Okay. Now, so this is agreed upon procedure. That what is agreed, we are going to perform that. Now, students, again, a short break time is around the corner. Again, a 5 minutes break. Don't go anywhere. We'll be back. We have to discuss very important terminology. And that will be the end of this first topic, assurance. So, which was the target for today. So, see you after 5 minutes break. Yes, everyone now. The next point is, I have explained that before, but going to re-explain. If you see audit report and you have every one of you know, some of them were narrating the same wording as well. And you know, this is the most irritating thing for me being a lecturer for audit, when people misquote and use it in an inappropriate way. You know, and please, what is the wording of audit opinion? In our opinion, financial statement give true and fair view of company affairs in all material respects. True, fair, material. These three point words I have to explain. What auditor is saying basically? It means auditor has checked the audit financial statements. And now he's going to give report. And the report is that he's saying, I have checked these financial statements. These financial statements give true view of company affairs, true picture of company actually affairs, fair view of the company affairs in material respects. In material means important. For the time being, keep that in your mind. Important. Important aspects. Now, true and fair. Now, what is the meaning of true? I have already told you. When auditors say this financial statement is giving true view of company affairs, means it is information conforms to reality and is factual, based on facts. Information is based on facts. Financial statements have been correctly extracted from record, from books and record. You know, financial statements are prepared based on accounts and record. Correctly, I have checked. When auditor is saying financial statement is true, it means auditor is validating it has been extracted correctly. And what is the meaning of fair? It is unbiased information. When it was prepared, it is prepared in an unbiased manner. It is as per law and accounting standards. Yes, financial statements have been prepared as per law and accounting standards. And third thing, it reflects commercial substance of transaction. Commercial substance. In F3, which is also called financial accounting, you may have studied a topic that is substance over form. I'm not going to recall that. Just give you an overview and we'll explain this point. Students, substance over form is basically, sometimes business does not own the asset. It is leased, but it is recorded as asset of the company. Yes. Legal ownership is different. But commercial ownership is by the company because company is utilizing the major benefits of assets. So it is recorded on the basis of commercial usage. Who is in fact the owner? Legal title doesn't matter. Another example. Let me use simple example. I purchase a car which is 2020 model, and I give it to my younger brother for 20 years. Legal title is in my name, but commercial ownership, because 20 year means useful life gone. That is, who is commercial owner? My younger brother. So it should be shown as an asset of, if it is a business of that person. Got that? So fair means it is commercial ownership. So when auditor is saying that financial statement give true and fair view of company affairs. So auditor means that. And the next is it clear? True and fair is clear? Tell me. Good.
Yes.
Good. So material respects, auditor is not saying it is 100% correct, 100% factual. No. He is saying factual in material respects. Material means important. So material, fair, it is fair. It is showing fair view in material respects. What is material? What is material? Materiality. What is that? Material means relative significance or importance of item in a particular context. One amount, for example, 1 million. Is it significant for MCB? Tell me. It is significant for MCB? No. For MCB, it is a small amount. For me, it is very significant. It is material for me, for my financial statement. But for MCB financial statement, it may be a very small amount. So materiality means relative importance in all material. So what is important for it, for this business? It is showing correctly, in true way, in fair way. What is important for it? Now, so you may have studied a matter is material if its misstatement affects the decision of the financial statement user. That's correct. Of course, that is correct. For me, if I say MCB has lost 1 million, I say, oh, no issue at all. But if they say, my business loss, oh my God, God forbid. So huge, big blow. For example, so material. Now, the last point, the last topic for today, that is the limitations of audit. Limitations of audit. What are the limitations? Students, during the audit, at various stages, we say auditor uses judgment. So where there is judgment involved during the audit, judgment may go wrong. Subjectivity. Where there is subjectivity, no matter how prudent you are, sometimes you may do mistake. Yes. And then you know that. Second is sample-based testing. We know that auditor does not check all items. He selects sample. And hence, when sample selection in itself, it is a drawback. Next. You know that year end is 30th June. Audit report is coming September end, 3-4 months, or October start, 3-4 months after the year end. Huge gap. It means you cannot make decision timely then. Decrease the usefulness, you know. Immediate report is not available. Audit report is issued after the year end. Audit report is issued long time after year end, which decreases its usefulness. And the fourth is audit report format is standardized. Standard wording, standard paragraphs. I will teach you. We will study. That's part of our syllabus. So when it is standardized audit report, standardized format is there, it means it may miss some important matters. And you know that audit report format is changed. It was changed last time in 2015, 16, I think. So why the change? Because they think it is not covering some matters. And they keep changing. So it may not cover important matters. And the last point, audit report is based on audit work, audit evidence, which auditor basically, auditor evidence is sometimes indicates what is probable, not certain. What does it mean? I am checking financial statement of a company at year end, and I'm checking the transaction which occurred 8 months ago. You know, expenses, incomes. So I say, okay, show me sales, show me sale invoice issued to the customer, show me sale order, good dispatch note. And since controls are good in the company, So it is highly probable that this sale recorded is valid. But can I be 100% sure? Sometimes it is not possible. Because sale occurred, cash sale occurred 8 months back. How can I be certain? No. So this is drawback. Sometimes what evidence, proofs about some matters are available, they are based on probability. Not certain. They are not certain. This is drawback. So ultimately, of course, this is drawback. Any point you want me to re-explain in the limitation of audit? Anyone, any issue? Please do let me know. Yes, please. Yes, because audit report is being issued. If financial statements are not good, there is some problem going on in the company that is being identified after 3-4 months. Year end is 30th June. Report is coming in October. If the report were available in July, it would have been more prompted and action should have been taken timely. Now it is report is coming in October, and 4 months delay before the action is to be taken to correct anything wrong. Got that? Zubair, is that clear? Good. So students, what about others? Anyone, any question about today's lecture, about syllabus, about subject, about our course? I need response from you. Is it clear or any question? Please open your mic, talk to me. I have done with today's lecture. Yes, please tell me. Good. So students, those who have not enrolled yet, kindly enroll yourself. Contact via our official WhatsApp. And in the next class, before next class, I'll be sending you people the notes, this volume 1. And you see, we have done today's job. Okay. In the next class, very important lecture. Regulatory environment for audit. We have to cover overview of audit process. Once again, very important, and acceptance of audit and control introduction. So the next class is again going to be very important. So we are going to meet the next Saturday. Thank you for joining. God bless you. Take care. Goodbye. Goodbye.
Goodbye. Thank you.
Goodbye.
Thank you, sir. Goodbye.
Bye.
Thank you. Goodbye.
Thank you, sir. Bye.